We're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. See that sparkle in my eye? Oh yes, it's my favorite time of the month. We're hearing from the class clown, Gordon Genius Johnson, sharing his intellectually rigorous thoughts on Tesla stock. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. And by the way, just so we're super clear, it's never anything personal on this channel. In fact, I've never met Gordon. I'm always talking about the ideas and the analysis and the thinking, or severe lack thereof, rather than making it personal and attacking the person. So just want to make that very clear. I'm sure Gordon's a really lovely gentleman, but he does occasionally say things that are so incredibly stupid regarding Tesla stock that I must call them out. Let's get into it.
I want to spotlight the action we're seeing here in Tesla with shares in the green following an interesting report on plans for the Model S and X at the electric automaker. Tesla planning to idle production for those models through January 11th, according to an email for the plans obtained by CNBC. It's an interesting production pause considering those models are not exactly the most popular there, only about 11% in terms of deliveries in the latest quarter. And a new report out from Electric saying part of the reason could be that the automaker has already met its goals for Model S and X deliveries for the fourth quarter. Interesting there, could be driving the price action we're seeing here today. For more on that, I want to bring on our next guest. That would be Gordon Johnson, GLJ Research CEO and founder here with us. Gordon, appreciate you taking the time here to chat. I mean, it's obvious that Tesla's been focusing more on the cheaper Model 3 here. That's the main driver, of course, the main shift, kind of ahead of the incredible rally we've seen here this year. But what do you make of that, and how important is it for Tesla and Elon Musk when we talk about the Model S and X?
Well, I think it's baffling some people because just a few days ago, Elon Musk put out an internal email that was leaked to the public that said they were effectively production constrained. They needed to significantly increase production. And then a few days later, we find out they're shutting down production for the S and X for 18 days. Look, I think it's one of two things. One being, A, being rather demand is a problem, or B, being rather they need to retool or refurbish the model to make it more attractive. Either way, it's a demand problem and kind of stands in contrast to what Elon Musk said just a few days ago, i.e. that they were production constrained.
Absolutely incredible powers of deductive reasoning here from Gordon Johnson. Yes, Tesla's shutting down production lines temporarily for upgrades obviously equates to the fact that there's no demand for their products. I mean, this is so obvious. Thanks for pointing that out, Gordon. That's the only possible conclusion, so I'm glad that you've let us know. Here I was thinking, well, maybe they've made some improvements, there's a bit of a refresh, they've got some new manufacturing techniques, implementing some things that allow the vehicles to be safer, cheaper, faster to produce, something along those lines. No. It only can possibly mean one thing: demand problem. Thanks for letting us know, Gordon. Should I sell all my Tesla stock now?
So which do you think it is?
I think it's probably a combination of both. We know those models haven't sold well, so I think that's a problem for them. But I think there's other issues that we can get into. A couple of actions Tesla has taken recently that suggest demand is really a problem.
Definitely. Actions such as expanding capacity in Shanghai, currently constructing a factory in Berlin at breakneck pace, building another factory, a massive one in Austin, Texas. In fact, they're doing 24-hour shifts to speed up construction to get this thing built sooner, clearly all indicating to a severe lack of demand. Gordon.
What might those be, though? Because when we're talking about a stock that's up so much there this year, people have been talking about the idea that demand has been strong considering, the delivery targets being shattered quarter after quarter for Elon Musk and co. I mean, it seems like things are moving in the right direction, but I know there are other critics out there that point to increasing competition, not just from the traditional automakers, but a lot of other ones out there, mainly NIO in China, maybe eating into the China growth story that's propelled this stock so much this year.
Right. So I think what's important is, look, we're the biggest bears on the street, and our estimate for 4Q deliveries is 180,000. The street consensus is below us. I think everybody's below us. So I think the street overall is sandbagging their numbers, which allows Tesla to continue to beat.
Okay, we got to back up for a moment. So much just happened. We need to unpack this. I can't believe I just said unpack this. It's the first time I've ever used the term unpack, and I wasn't being a moron in a boardroom, but I actually mean this. Okay. So the biggest bears on Wall Street have the highest delivery estimates for the quarter. I mean, okay, cool. Now, and the reason for that, apparently, the implication here, allegedly, in my opinion, I mean, maybe I'm misinterpreting what Gordon said, is that the entirety of Wall Street is colluding with Tesla in order to allow Tesla to beat estimates. Just fuck me. Oh, you're grasping at straws. I mean, let's move on. Fuck me.
But think about this. Just over the weekend, we found out that Tesla is offering free supercharging for a full year if you buy a car made out of Fremont before the end of the year. That suggests they're trying to pull in demand. We found out last week they cut the price on their German inventory cars by 1,090 euro. That's a big price cut. They're trying to push through demand. And we know that Elon Musk has cut the production, et cetera. And if you looked at China, right? So in China, people got excited about in October, the sales were about 12,000. In November, it looks like they jumped to about 21.5 thousand.
Okay, yep. So deliveries in China practically doubled month over month. I can't wait to see how Gordon spins this into a bearish point.
We believe what enabled that was an 8% price cut at the beginning of October, which we really saw in November.
So Tesla continuing to stick to their plan of driving the cost of their products down and passing those savings on to consumers.
But the problem is that price cut was enabled by them changing technology, LFP batteries, which are now being widely reported in China to only get 50% of the range in the winter and only get 50% of the range reported today in Europe in the winter and cold weather. So the problem is, potentially for Tesla, is are they going to be able to continue to sell that amount of cars in China now that people are seeing that the range is only half of what's promised? And we also think there's issues with respect to the coming S&P inclusion.
And I mean, I was going to say that all of this you're pointing out here, as we look to that inclusion on Friday, certainly the announcement was a big catalyst for the stock. You say that you're very bearish on it right now. We're looking at Tesla's trading at $635 a share, roughly. Where do you think fair value is?
I think fair value for Tesla is probably around 60 to 80 bucks. We think it's going to head there. We think it happens next year. We think
60 to 80 bucks.
Going to be a problem. Want to talk? No, go ahead. I'm sorry.
Did you say 60 to 80 bucks?
Correct.
Walk me through your thesis.
Right. The thesis is simple. Tesla's currently trading at about 200 times earnings, whereas on average, automakers trade around 6 times earnings.
Oh, silly me. I forgot. Tesla's just an automaker. That's why companies like Volkswagen are holding internal meetings, trying to develop a plan to catch up to Tesla by transforming themselves from an auto manufacturer into a software and transport as a service company. Thanks, Gordon. I'm glad you pointed that out, man. It's my mistake. My bad.
Tesla is seen as a technology company, but they don't have the technology that people think they have with respect to, there's no there with respect to the batteries. And with respect to S&P inclusion, I think this is important. Since the S&P announced they were going to delay the inclusion about a month and a half ago, or they were going to include them about a month and a half ago, there's been about 1 billion shares traded. And prior to that, when they reported a profit in 2Q, there was 1 billion shares traded around that time. However, based on the S&P's own estimate, there's about 130 million shares that need to be purchased by indexed fund holders. So the point is, on that inclusion, you're going to potentially have a lot of shares that have been front run on this inclusion that are going to have to be sold. So you could have a significant sell-off on Friday or before Friday as some of that money that went into Tesla stock looking for inclusions comes off.
I don't believe it. This is the first thing I've ever heard Gordon Johnson say that may actually be grounded in reality. Now, I'm not saying this will happen, but it is a probability, unlike basically everything else I've ever heard come out of this guy's mouth. I discussed this possibility in my recent video warning Tesla stock investors, so if you haven't seen that video already, check out the card in the corner.
Now, to your question of what our thesis is, listen, next year, right, Tesla has only been profitable 4 quarters out of their entire existence as a company since 2016, excluding credit revenues.
Here we go with the credit revenues again. I've already debunked this. I'm not even going to bother this time, but just for those of you who may not be aware, Tesla has posted 5 consecutive quarterly profits in a row. This is a trend. They're going to continue ad infinitum.
These are government-funded revenues that Tesla gets. They weren't even profitable last quarter. Next quarter, for the most part, we believe those credit revenues significantly fall and in 2022 go away. The reason is because every automaker is now selling their own EVs. So if Tesla goes back into loss-making status, and when you add to that the fact that even the big jump in their Chinese revenues, their market share in China only went from 8% to 12.5%, October to November.
So Tesla's market share went from 8% to 12.5% month over month, a 50% increase in market share. I can't wait to see how this one ends.
The prior high this year was 25%, so they're losing market share in China.
The mental gymnastics here is truly astonishing. In fact, it's kind of impressive. There was a period earlier this year in which Tesla did temporarily capture a 25% market share in China. Guess when that might have occurred? During a fucking pandemic, when other companies who didn't have contactless deliveries, didn't have ordering online, etc., weren't able to deliver vehicles to customers. So never mind the fact that post-pandemic, when things are back to normal, at least in China, Tesla has increased their month-over-month deliveries and their market share by an enormous margin. No, forget that. Tesla's demand is collapsing. Their market share is collapsing in China, obviously, because there was a period earlier this year, once in a 100-year event, when Tesla had a higher market share.
And their EU market share has fallen from about 33% in Q4 to around just above 10% right now. So in the markets where you have competition, they're losing share. So as their growth slows, as their earnings turn back negative next year, we think there's going to be a significant sell-off in the shares. Institutional ownership right now, 41% roughly, nearly an all-time low. As people start to sell those shares and the retail money, which is driving the stock, starts to sell, we think there's going to be a swift downdrift in the stock. You've seen this before. I know it sounds crazy. Look at Tilray. Look at Sun Edison. Look at Suntech. Look at some of these stocks where they went from 5 to 300 back to 5. They went from 2 to 300 back to 0. It does happen, and we think Tesla is a prime candidate.
Okay, interesting case there. Yeah, especially because there's so many who are very bullish on the stock. Gordon, it's good to talk to you. Gordon Johnson, GLJ Research CEO and founder.
And there we have it, folks. Some insights into what it looks like to see a man with a humiliation fetish. Oh, hang on, sorry. Some really intellectually rigorous, well-articulated points regarding Tesla stock. Let me know in the comments below. Do you believe Gordon Johnson actually believes what he's saying? Or is it a possibility that there may be an ulterior motive? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.